Okay, so we're going to approach this a little differently. All right, I'm going to start with what is private banking. So I think many of people have heard about private banking and retail banking, but what does the private actually stand for? Why is it different from retail banking? And you have to look at the history books to figure that out. All right, so technically, to become a private bank, there are two conditions. And the first is that you have a legal structure, which is more or less a partnership. So a couple of people who own the bank. And the second condition is that those partners actually are responsible for the liabilities of that bank. And if you look at this slide, you see that there are only 5 private banks left in Switzerland. They're all here. And this is according to the Swiss Private Bankers Association. But we all know that we hear about private banks all the time and they're not on this list, so what's the deal? Right? Why do we talk about private banks, but according to this definition and according to the Swiss Private Bankers Association, why are they not on this list? And so then we find that the definition of private banking no longer really has to do with the word private anymore. I mean, private ownership, responsibility, liability, that's kind of thrown out the window. And what we found is that the definition has shifted. So what it means to be a private bank is no longer about partnerships or liabilities. It's about what you do, what the company does. All right, and so in this case, you see that if you offer wealth management services or investment advisory, then you can to the ultra high net worth segment, then you can be more or less considered a private bank. And if you count it with this definition, there are 93 private banks left in Switzerland. But instead of talking about the legal structure or the liabilities or what you offer, I want to offer my own definition. Right? I want to change kind of how a private bank is defined. And I think the best way to do that is to juxtapose it with what is a retail bank. And so when we think about retail banks, I look at a retail bank as very cheap. Right? We give you the tools, and you figure it out yourself. Right? So I give you the tools to do it. If you want to make a payment, go make the payment yourself. If you want to invest in crypto or equity or whatever, I give you the tools to do it. You go figure it out yourself. And I think this is where private banks should be defined, is we give you the tools, and yes, we charge a little bit more money, or we charge more money, but we help you all along the way. We help you with things like saving. We help you like things like spending. We help you with investing. We help you to live. Right? At the end of the day, the goal of all these things is not just to spend, it's to live. Live the life you want to lead. And so private banks, instead of saying, here's the tools, go do it yourself and we won't charge you much, it's, yes, there is some cost to this, but at the end of the day, we're going to help you live the life you want to lead. So that's the definition of private banking in my eyes. So now we're going to talk about, with this new definition, how do we define this new era of private banking? So I represent Alpian, which is Switzerland's first digital private bank that's been licensed by FINMA. So Alpian is actually a licensed Swiss bank, like all of these other private banks. And we're trying to drive a new era, but we're not the only one. There are many that are working in this direction. And I'm going to talk about what's defining that new era. And I'd say it breaks down into 3 different areas where we can recognize this big change. First is speed, the second is access, and the third is purpose. So if we go into speed, right, so this is a story that's often told. Right? You see big companies changing, big companies going bankrupt, and new incumbents creating a new era in these different industries. And I think the story is often told, but I think what's unique here is the speed. So if you look at the bottom, you see the years that it took for these things to happen. All right, so the iPhone has been around for 15 years. Think about that. 15 years ago, there was no iPhone. And today, basically everybody spends their entire day on their phones and their computers, and that's changed the way that you live your life. And so it's not to talk about that change is happening, it's that it's happening quickly. And banking is no exception. All right, so what we've seen is in retail banks is that this change has started to pick up. So you look at these examples, and you see that in 9 years, Nubank went from having 0 clients, and now it has 48 million clients. 9 years. That is speed. All right, and so we know about the Netflix, we know about the iPhones, we know about all these things. I'm telling you, in banking, the same thing is happening. All right, but private banks, what's happening about private banks? So private banking has been around for 270 years in Swiss banking. 270 years, and not much has changed. It's more or less stayed the same. And what I'd argue is now that the focus on bringing about a new era in private banking is here, you're going to see over the next 10 years things start to change. And not just Alpian, there's many different companies out there that are looking to drive a change in private banking. And so one of the defining characteristics of this new era is that you're going to see the speed change. Right? The past 270 years, not much change. The next 10, you're going to see a lot of change. So the other defining characteristic I want to talk about, so now that we've talked about speed, like what is actually going to change? And one of the things that I think is going to change is access. And I break it down into a little bit different of a thought process of like access. And I like to look at proxies. I like to look at other industries to see how it's done. And when I look at access, I've noticed that like when consumers make purchasing decisions, they typically split that decision into 3 segments. You have your basic, you have your premium, and you have your luxury. Basic is low cost, but it's available to everybody, and you can't expect much in terms of service or value. Then you have your premium, which is a bit more expensive, but it's also something that it provides you a lot of value, and it provides you, good value for the money that you spend on it. And then you have luxury, and this is available to very select few people. It costs a tremendous amount. Most people can't afford it, but it offers you something that, basically nobody can get, and it's supposed to offer you a tremendous amount of value. And when you look at the different industries out there, you see that this kind of dynamic, it goes across many different industries. And so, the one that I always talk about is the automobile industry. And so you've got your Honda, which is a great car, but it's no frills, right? It doesn't cost much. And basically you spend a little, you get something that's basic, and it does the job. Then in the middle, you've got Tesla, where Teslas are more expensive than Hondas, but you get more, right? You get a faster car, a cooler interior, all this technology, but it costs a bit more. And then on the luxury side, you have Ferrari, right? And this is very, very few people have a Ferrari, right? If we look at the world, it's a very tiny amount because it costs a lot. It costs a lot not just to buy, but then to maintain. And so if we visualize this today, how the banking sector fits into this kind of dynamic, you see that basically 98% of the people in the world have a Honda because there is no Tesla for banking. It's just retail and private today. There's nothing in between. So 98% of people. So if we have 100 people in this room, 98% of you will drive a Honda. 98 of you will drive a Honda for your entire life, and you don't have another option, just a Honda. That's all you get. And the lucky 2 in this room, you get a Ferrari, right? If you can afford it. And I think what's going to happen is, if we think about banking, we're now going to open that up, right? So that instead of 98% of people just getting retail banking and 2% getting private banking, we're going to open up the access. And so that the 50% will have retail banking still. The next 48% will get access to this new way of private banking, this new era of private banking. And the remaining 2% will continue to work with the traditional private banking. And so that's a defining characteristic, is you're going to see private banking and private banking services be available to much, much, much more people over the next 10 years. And then I think the most important shift that we can see is the shift of mindset, right? The shift of centricity. So when you think about banks, it's something where I think I've worked in a lot of banks. They're great companies, There's a lot of great people working in banks, both private banks and retail banks, but they typically have a firm-centric approach, right? They're caring about things like the bottom line, brand recognition, ownership structure, and AUM, right? And thing that, while those things are important, your client doesn't care about those things, right? They really don't care about those things. If you go out and you say to the client, like, look, I've got the best AUM in the world, or I've got the best ownership structure in the world, you tell that to your clients, they're not really gonna care. They're just gonna say, great job. And then what about your app? That'll be the next question. What about the experience I have when I actually use your services, or the costs? Right? Does it cost me a lot? And so I think there's going to be this shift from a firm-centric model to a client-centric model. Right? And I think that this is demonstrated by the rest of the world. Right? All of the product companies out there, all of the biggest companies that have grown over the past years, the ones that we refer to in speed, they became industry giants because they were client-centric, because they focused on things like client satisfaction. They focused on things like innovation within the product and the fees. They thought about brand purpose. What does your brand actually stand for? Not just is it recognized, but what is it actually, why would people join your brand or your bank? And the client experience. Again, I think the notion that banks can continue to get away with, private banks can continue to get away with, a non-modern client experience, one that, when they go to their, how they order food, or how they book their flights, or how they reserve a hotel, and they've got this seamless experience. And then they go to their bank, and it's like this thing from 20 years ago or 50 years ago. And if you expect that banks can continue to get away with that, where in every other aspect of your life, the experience has been modernized, but banking has not, that's going to change. And I think in the next 10 years, we'll see that in private banking, in this new era of private banking, the client experience has to change. And that's not just from a digital perspective, it's from a mindset perspective as well. So look, those are the three characteristics that I see defining the new era of private banking. But how will those characteristics come to bear? And I can talk about this for a long time. Unfortunately, we don't have that much time. So this is a whole nother presentation. But I'd say the driver of the change of this new era, it comes down to three topics. One is technology. So technology, I think, as everybody knows, is going to provide new ways to do things in an incredible client experience, to bring in new services into private banking, also to reduce the costs, which reduces the price for clients. Second is the team that you hire, the people that you hire. So for example, at Alpian, we bring the best of banking, private banking, and non-private banking together. So we hire from companies like Google. We hire from companies like McKinsey and BCG and tons of great companies. And we combine that with banking so that we respect what it means to be a bank, but we also respect what it means to be a modern company with a great client experience and great client satisfaction. And so that's going to be one of the driving factors as you see, people join great teams. They're going to drive this new era. And the third, which ultimately is the most important, is client preference. Clients should choose the directions you go. All right. So as companies hear from their clients, it's their prerogative to learn, what do clients want? And then to follow in that direction. And I think for private banking, it's not just listening to what they want, but then figuring out what's the best way to offer it. So crypto comes up a lot to me. Why don't you offer crypto? Why don't you offer crypto? Why don't you offer crypto? And my reason is simple. I know people want crypto, but I want to offer it in a new way. I don't want to offer it so you just basically go gamble your money away. As I said before, that's what a retail bank does. I give you the tools to buy crypto, you go figure it out yourself. What companies like Alpian and new private banks want to do is offer crypto, but help their clients actually understand what they're doing. I mean, people talk about crypto all the time, but they don't actually know what they're doing. They don't even know what they're talking about. They don't really know what crypto is. And so if we're going to offer crypto, we need the competence and the experience to be able to advise our clients on how to invest in crypto and interact with crypto in a great way. And so when you talk about consumer preference, it's always in this kind of, again, coming back to the definition of private banking, where we help the client do it. So I'll end on one thing, which is something I've talked about before, but I think is extremely important, is the mindset. Right? So what's going to drive this new era of private banking, one of the critical things that private banks need to inspire is this question of what is next. Right? There's too many private banks out there that don't even, their clients, the people around them, the investors, they don't get inspired by this question of what is next. Right? When you look at companies like Tesla or Elon Musk, right, for example, you see the guy is always trying to do something new, and that's exciting, and it's something that people follow. But in private banks, it's never been about what's next. It's been about what do we have today. And I think in the new era, you're going to see this mindset shift where companies, not just Alpian, but many new private banks, they're going to be driving this question of what comes next. And it's going to be very exciting for our clients. So anyways, I'll end there. Thank you for welcoming me to Zurich.
Thanks so much, Schuyler.